Hey everyone, Nicholas from Unusual Whales here with yet another suspicious preemptive set of unusual options flow. We're going to cover each contract caught by the Unusual Whales Discord community before the news, and then we'll wrap up with the profits for each. Since July 1st, KLG net call premiums have been elevated day over day. And users in the Unusual Whales Discord community noted unusual options activity first on the KLG $17.5 call expiring on July 18th. More than 3,500 contracts transacted at the ask for an average cost of $45 per contract. Although we did see a lot of contracts also transact as low as $20 per contract. Days later, on July 7th, another 2,300 contracts transacted, again at the ask, this time for an average of $78 per contract. Now, as we can see in the historical volume and open interest, these contracts did experience quite a bit of drawdown, trading as low as $45 per contract, both the day before and the day of the news. The next unusual contract noted by the community was the $20 call of the same expiration, July 18th. On July 2nd, 1,000 contracts transacted at the ask for an average of 19 cents per contract. Then once again on July 7th, an ad was observed for another 1,500 contracts at an average price of 32 cents per contract. Then on July 8th, yet another contract hit the tape, the KLG $17.5 call for August 15th. Here we saw 2,700 contracts transacted, with nearly 2,400 contracts carrying over into the open interest, having transacted at the ask for an average price of $1.14. The very next day, on July 9th, we saw more repeated action on the contract for another 2,000 contracts coming through at the ask, this time at an average price of $1.28 per contract. So what exactly happened here? Well, on the evening of July 9th, reports surfaced that Ferrero, the Italian makers of Nutella, had made a $3.1 billion takeover bid for WK Kellogg. The market responded instantly, and after hours trading, after the news hit, shares exploded as high as $27.38 per share, marking a 56% gain in just hours following the news. By the morning of July 10th, despite a pullback from those extended hours highs down to the $23 range, the reaction in those unusual call contracts at market open on the 10th was insane. The $17.5 call for 7/18, first observed in that Unusual Whales Discord channel, exploded to a high of $7.60 per contract. From their weighted average entry of roughly 58 cents per contract, that marked a 1,208% gain in just a week of holding. There is evidence of a positional trim roughly the size of the second ad at $5.27 per contract, but at the time of recording, we can confidently say a large portion of this position remains open. The same can be said for all of the other contracts we covered. The $20 call for 7/18 hit a high of $2.98 per contract. That's a 1,012% gain from the total average cost of the position at 27 cents per contract, also in the span of just a week. The $17.50 contract for August, which had come in just hours before the takeover headlines hit, ran up to a high of $5.60 per contract. From that total weighted entry of $1.20 per contract, that's a 365% overnight return. Trades like this are certainly unusual, enough so that the Discord community had been watching these positions and talking about them all the way up until the very moment that the news dropped. I hope videos like this help you see how users are reading the flow and why we always find ourselves asking the same question. Does someone always know?